Okay, testing, testing. Okay, seems like everything's working. Hi, everyone. Hi. Hi. Hi, Forex guys. Hi, Charlie, Rayleigh. Hi. Okay, cool. I think everything's working fine. I think, yeah. Screen is working. You can see me. I mean, that's not important. More importantly is you can hear me. Okay, if any point of time you guys stop hearing me, that means that I have accidentally muted myself or something has gone wrong. Just let me know in the chat box, okay? You need to let me know because if you don't let me know, then I wouldn't know and I cannot unmute myself. Okay, so hi everyone. Welcome to today's webinar brought to you by IC. We are doing a live analysis session today. I think you guys really like these sessions. Right, I'm basically going to go on the charts. I'm going to show you guys how I do my analysis, but please do not take this as a signal to buy or sell. Today is the 28th of January, 2026. Finishing up the, we're coming to the end of the first month of 2026. It's so fast, man. I feel like we just got into the New Year's yesterday and here we are going into February. Okay, so I hope your trading has been good so far. Um, yes, so before we continue, I do need to touch on the disclaimer. You guys know this how this works. If you guys are early, you guys are basically just sitting through this introduction with me, which is good. You need to sit through the introduction. It will help, especially if this is your first time here. Okay, disclaimer, disclaimer. Anything that I share in these webinars should not be construed as any form of financial advice, trading advice, any form of signal to buy or sell anything. I am not telling you to buy or sell anything. I'm not giving you any advice of what to do with your funds. That's all up to you, okay? Please take this purely as educational. The whole point of this webinar is for educational purposes. It is to give you a perspective from a different trader's point of view of how to do your analysis and how you can apply that. Hi, Jamilu. How you can apply that into your own trading style. Okay, please again do not take this as a signal to buy or sell. On top of that, trading forex and CFDs carries a high level of risk to your capital, and you should be cautious. Okay, so I'm gonna have to stay here for a minute or two so you guys can read through the disclaimer. In the meantime, let me grab some water. So as you guys know, I am actually based in Singapore. There is haze going on here. Everyone around me is having like a sore throat or like runny nose or something. I almost had to cancel today's webinar, but yeah, here we are. So bear with me if I have to take a lot of water breaks. I'm just hydrating because of the air quality. But yeah, just be patient. We will go through today's session. Why haze? Okay, so Singapore is located next to Malaysia, and I think they're burning the forest for development. You know how they want to build like condos or schools or hospitals or whatever? They're just like burning the forest. I know it's better to bulldoze them, but it's probably cheaper to burn. It's really bad for the environment though. Okay, but yeah. Okay, I'm guessing you guys are done with the disclaimer. Let me move on. Okay, I'm gonna introduce myself. Just a really quick one. Maybe I'm just going to take a minute on this. My name is Cassandra. You guys can call me Cass. I am an investment analyst from Evers Fortune Group. We are based in Singapore. We have been recognized as the finalist for the best forex and best equity research for multiple years running. On top of that, I am also a prop trader. For those who don't know what prop trading means, it means that I am funded by multiple companies to trade their funds. How did I get this funding? I had to pass their tests. The test usually requires me to do 10% profit within a month. I have done that multiple times. On a normal month, I'm usually doing 6 to 8%. Let's not talk about last month or this month because I haven't been trading because I have been traveling quite a bit. Yes, that's what trading can do for you. It can fund your travels. So I have been traveling quite a bit and I haven't been trading a lot these 2 months. But yeah, my usual take home is about 6 to 8%, sometimes 10. Within the month. Okay, how do I do that? I use technical analysis, which is exactly and a combination of fundamental analysis. Fundamental analysis I won't be able to show you in today's webinar because fundamental analysis takes a lot of like news reading, deciphering what the news is saying, deciphering data, economic data and whatnot. Okay, I won't be able to do that with you guys in these live analysis session because this live analysis session is basically purely focusing on technical analysis. So I'm going to show you guys what kind of technical analysis I use to get my analysis at the end of the day. So I'm going to go through this cheat sheet checklist that I use every single week. I show you guys. I've been using it week after week after week. Sometimes I will admit it doesn't work and I hit my stop loss. Okay, but most of the time you guys can backtrack because it's recorded, right? We are on YouTube. You guys can backtrack. I think my win rate is way higher than my losing rate by using this cheat sheet. Okay, and then we're gonna go into live charts and then we're gonna see whatever key approaches there is on the live charts. Okay, so this is the cheat sheet that I use every single week with you guys to come up with my analysis. If you guys want to take a photo, do it now, and then I'm going to start drawing on it. Okay, so I'm going to give you 5 seconds to take a screenshot. I mean, you can, we are on YouTube. You can just pull back and take a screenshot later on. Okay, so, but yeah, 5, 4, 3, 2, 1. Okay, so I'm going to start drawing on this. So the first part of my analysis using this cheat sheet is these 3 parts. It's very important. So to be very clear, I am a trend trader. That means I need to know if price is going up or down. Okay, if price is going up, I'm going to enter a buy. If price is going down, I'm going to enter a sell. Okay, it is as simple as that because I am a trend trader. I'm basically just following the waves and not going against the waves. Like if you are swimming in the ocean. Okay, for example. So how do I look for uptrend or downtrend? I use a trend line. I need 3 significant touches for the trend line to be valid. Or if not, I would use a channel. So a channel would need 4 touches, 2 on the top, 2 at the bottom, 2 on the resistance area, and 2 at the support area. And then I will pull out my horizontal levels. Horizontal levels can be pullbacks, overlaps, significant swing highs, and swing lows. And this will give me my entry, my stop loss, and my take profit. And this is a combination of using Fibonacci levels as well, because sometimes there are just no horizontal levels. There are no significant swing highs, no significant swing lows, especially when price is doing an all-time high. There is no swing high or swing lows because price is still doing an all-time high. How do you then decipher or forecast where the next level is? You use Fibonacci levels. Okay, so then that's a combination to get your entry, your stop loss, and your take profit. Okay, once that is done, I will then see if there's any chart patterns: wedges, triangle, double tops, double bottom, head and shoulder, triple top, triple bottom, inverse head and shoulder, teacup pattern, whatever chart pattern there is that will help my analysis become more high probability. Morning from the UK. Hi, Ninder Singh. Good morning. Well, it's afternoon here in Singapore. Okay, so then I will look for any death or golden crosses with the 200 and the 50 moving average. So I like to use the EMA. SMA is fine as well, as long as it's a moving average, it should be able to give you information. Once that it's done, I will see if there's any natural moving average. Usually, if this is good, you don't really have to use this. Okay. Okay, so the next technical analysis or indicator that I will use is stochastics and RSI to basically look for bounces and reactions, support and resistance zones, or divergences. If I see a divergence, it means that the oscillator is trying to signal to me that there could be a trend reversal, and immediately I will bring my rating for that analysis to like medium rating or whatnot. Okay, when I say medium, I mean I do my analysis and sometimes I rate it by whether it's high probability, medium probability, or low probability. So if I see a divergence going against my analysis, I will immediately think that my analysis is not high probability, meaning that there is a chance that my analysis might work out. It's just that it's not high and it's not great. We only want to take high probability setups, right? You only want to take high probability setups. Okay, I'll give you an example. If today your friend comes to you with business A and business B and be like, hey, Jamilu or Forex guys or Ninder Singh or Charlie Rayleigh, do you want to invest in business A or business B? And then he says, if you invest in business A, there is a 90% chance that it's going to be successful? Or do you want to invest in business B where there's a 50% chance that it'll be successful, there's a 50% chance that it might fail? Obviously, you're going to go with the one that is higher rate of success, right? So it is the same with analysis. I will only take trades that are high probability. Okay, if it's not high probability, why are you taking the trades? Because there is no point taking low probability or medium probability trades. Like, why are you taking the risk when the market is so vast and there's so many analysis that you can do, there's so many charts that you can chart on, there's so many things that you can do in the forex markets, in the cryptocurrency markets. Okay, you don't need to force something just because you want to force it. Okay, so once I'm done with my analysis, I will then pull out some correlations. Okay, so when I say correlations, I think some of you, especially the newer people here, will be confused as what correlation means. So correlations is basically just using another chart, another pair to make your analysis make more sense. So for example, if I am trading the EUR USD, if I'm entering a buy for EUR USD, I'm basically hoping that the EUR, the euro, goes up in price and the US dollar drops in price, right? That's basically what I'm hoping it happens. Okay, so alternatively, what I can do is also look at DXY. What is DXY? DXY is the US dollar index chart. Okay, so this tracks the movement of the US dollar against a basket of currencies. So you also want the DXY to drop in prices. So if the DXY is also dropping in prices, then you have your correlation that this analysis makes sense. If you're doing an analysis on EUR USD and it's showing you that it's a buy, but you go into DXY and DXY is also showing bullish, it means that there is something wrong with your correlation and that it could be that one of your analysis is incorrect. Okay, so the next example will be using currency with commodity. So these are commodity currencies. So an example will be Canadian dollars and oil. Usually if the price of oil goes up, Canada dollars, Canadian dollars as well will go up. If oil prices drop, Canadian dollars will drop as well. Why? Because Canada is a very big producer of oil in the world. So the prices of Canadian dollars are pretty much tied to oil prices. Obviously, there are other things to look at as like local politics, local economics and whatnot, but there is a good correlation between oil and the Canadian dollars. Other examples will be Australian dollars and, oh my gosh, it just slipped my mind. Australian dollars and iron ore. Oh my gosh. Okay. Australian dollars and iron ore and New Zealand dollars with dairy. okay? Because these are countries that produce that kind of commodities in big volumes. Okay, so next, another correlation is using currency to currency. So I don't know if you guys know, but Australian dollars and New Zealand dollars tend to move in the exact same direction. New Zealand dollars tend to follow the direction of the Australian dollars because their economies are so much tied together. So if Australian dollars move up, New Zealand dollars usually move up as well. So if you do an analysis on AUD USD and it's showing you up, New Zealand dollars against the USD should also be moving up as well. If one is moving up and the other is moving down, that means there is no correlation and you should redo your analysis. Okay, that's how correlation works. So once all of this is done, I'm basically done with my analysis, and then I can decide if I want to do a reversal or a breakout. But I mean, this is actually part of this front part as well. Okay, so that's that with the cheat sheet. Let's move on to the actual analysis for today. Okay, thank you guys for sitting through my analysis, my introduction. Give me a moment to pull out trading view. Give me a moment, sorry. Where is it? I had it on just now. I have too many tabs on. Give me a moment, guys, sorry. Yep. I need to reopen it because I've lost it. Okay, so I do these analysis with you guys every single week. I don't change my analysis. Every time I review my analysis is the following week when I take you guys again. I want to be very transparent with you guys so that we can see together if the cheat sheet actually works. Because if the cheat sheet is not working, I eventually have to change the cheat sheet, okay? I eventually have to change the cheat sheet because it's not working. So last week it worked very well. I remember Ethereum and gold both hit the take profit. We need to see, not last week, 2 weeks ago. So let's see how last week did. Again, I'm not changing anything. If it didn't hit the take profit, it didn't hit the take profit. I'm being very transparent with you guys. Okay, so this is goal. I did say low probability. If price goes back to entry, chance of getting stopped out is high. Alternatively, I don't think it's even going back to entry. It's probably going to do a breakout. Okay, so yeah, I was saying I didn't trade last week, by the way, so I cannot tell you my win rate. Usually I will tell you guys my win rate, like, oh, last week I did 3%, last week I did blah blah blah, last week I did 1%, last week I did not trade at all, last week I took a loss. Okay, I did not trade, so I don't have a score to give you guys. Okay, so my idea was that if price comes back a second time, then to get in for an entry. It did not come back a second time, right? It did not come back a second time. It did a breakout, so that was, I don't think it's even going back to entry, okay? Because that is the characteristic of gold. If you guys look at gold, you notice that it does one and then it moves up, one and then moves up, one and then moves up. So it doesn't do one and then come back a second time before moving up. If it comes back a second time before moving up like this is a, you want to be cautious, okay? You want to be cautious. So I didn't think it was going to come back anyways. I thought it was going to do a breakout, okay? So true enough, it did do a breakout, and this actually would have been the better entry, okay? So initially, my idea was to pull back here, and then from here it goes back, but it didn't pull back. It immediately from here, it did a breakout, and that's totally okay. So that's okay, that's fine. Let's see what we can do this week with gold. Okay, if we guys are looking at gold, it's at an all-time high. It's at $5,300. That is crazy. Wow, that is crazy. If you bought gold a few months ago, a year ago, you would have doubled your investment. That is crazy. This is one trade that I missed. This is one thing that I missed out on. I was so focused on cryptocurrency, but I did not see I did not expect gold to do this. That is crazy. Okay. What is gold going to do? Okay, we need to go back to the cheat sheet. This cheat sheet requires me to do horizontal levels. If we're looking at gold, right, there is no horizontal levels to do because I need pullbacks, overlap, swing highs, and swing lows. There is no pullback, overlap, swing highs, and swing lows that I can use in recent times that would make sense, right? The closest swing high that I can find for gold is here. This is the best, the closest swing high. If not, the swing low is here. Okay, do you think price is gonna pull back to here before continuing up? I don't think so. Okay, the momentum right now is crazy. I don't think it's suddenly gonna pull back at this current point of time. So what I'm gonna do is we're gonna skip gold because it looks like it wants to keep going up to where? Let's find out. Let's find out up to where. It was supposed to stop here, but it doesn't want to stop. Gold does not want to stop. Okay, sometimes technical analysis has its limitation, right? 2.618. Let me see. Why wouldn't it let me press 2.618? Yeah, everything was showing that there should be a, not everything, but there should have been a stop or some kind of resistance or some kind of pause happening here. But you guys can see that price did not stop here. It wants to keep going higher. All three technical analysis, three Fibonacci levels pointing to this green zone here, but price did not stop. So if I had seen this earlier, I would have planned for a sell entry here. Okay, a sell entry, or maybe not even a sell entry. I would have planned for price to do some kind of reaction here, but you can see price did not do that. So this is when sometimes technical analysis alone cannot help you make the decision. This is definitely something to do with fundamentals. There's probably some kind of economic data. There's something in the news that is causing gold to go up in price. There's probably fear in the market or whatever it is. Okay, so we're gonna leave gold alone and we're gonna pull out the other charts. I'm gonna pull out three charts. The first one will be Ethereum. Okay, gold and EURUSD. And the correlations for EURUSD is DXY, US dollar index. This is the chart that tracks the movement of the US dollar. I mean, we all know US dollar is devaluing right now. Okay, this did not work out either. Okay, so the reason I called for a sell, remember, is because price was moving in a triangle. Okay, I followed the cheat sheet. It didn't work out. There was a chart pattern. There was a triangle. It didn't work out. There was a lot of resistance here. Price broke out anyways, and that's okay. That's okay. We just have to redo the analysis. Okay, let's start with Ethereum. Actually, let's start with EURUSD. Okay, so I was quite supportive of the idea of EURUSD reversing from here because you can see it has reached a resistance, especially on the weekly time frame. You guys know that the higher the time frame, the harder it is for price to break, right? So it has broke. This is a very clear breakout of EUR USD. I would say we are possibly, I won't say confirm, but possibly in it's trying to make an uptrend. Okay. So in that case, I'm just going to make my decision based on what price is doing right now. And price has broken a very important key level. It has even broken the last swing high here. There is a lot of bullish momentum happening right now. Okay. There is a lot of bullish momentum happening right now with price. Okay, my best bet is to enter for a buy at a pullback. Okay, remember price never moves in one straight line. Okay, it's always moving in a zigzag pattern. Every time it goes up, it will come back, it will do a pullback and then go up again. Do a pullback and go up again. So I think the direction is definitely up at this current point of time. The problem is where is it going to do the pullback to? Because that's where I want to enter for a buy. So right now I'm looking for a reversal entry. Okay, I'm looking for a reversal entry at the pullback. Give me a moment, guys. I need to switch off this phone. It keeps ringing. Okay, give me a moment there. Sorry, let me just mute. Need a minute. Okay, got it. Yeah, so I'm planning for a pullback, an entry at the pullback. Okay, will this be the best pullback? I'm looking for a pullback here in this green box. The question is where in the green box. So let me pull out some Fibonacci levels to make sense of it. The Fibonacci levels that's closest to the green box is where I'm going to put my entry. So we can see I pull out 5 levels. These are the 5 levels that we usually look at for Fibonacci. And the only level I'm going to keep is the 38.2 because that's the only one that falls within that box. Okay, actually we can leave the rest first just to see if anything else falls nearby. Okay, so other than that, let me pull up more Fibonacci levels. The more Fibonacci levels lining up in the exact same area or zone, the more likely price is going to reverse in that area. Okay, the more likely price. 8, 6. Yeah, so far so good. This little area here looks like where price is gonna reverse. Give me a moment to look for more zones. I'm trying. Change this to red, this one to blue, and this one to green, so that we can see the 3 different levels that are lining up in the same area. We've already done this. And this one to maybe purple or yellow. Okay. What am I doing? I'm trying to see if there's a cluster of Fibonacci lining up. Okay, cluster meaning there's many Fibonacci levels lining up in the same area. Okay, so this, I'm gonna get rid of things that where there's no cluster. So this 23.6, no cluster. 38.2. There's only 2 clusters here. I think that's not enough considering I pulled out 4. 2 cluster here, 2 cluster here. I'm gonna get rid of this, get rid of that. Only cluster. Okay, the red, 23.6, getting rid of that. 38.2, no cluster there. Furthermore, we want it to fall within the green box. Okay, I'm just gonna get rid of everything that is not in the green box. Let's save some time. Okay, so there is a cluster happening here within the green box. Okay, more specifically here. I'm gonna put it red. Okay, so I think if price pulls back, right? If price pulls back, I will consider getting in for a buy somewhere within this green box, more specifically within the red box, and more specifically somewhere near these Fibonacci levels. I'm gonna put it here where there's a cluster of 2 Fibonacci levels. Okay, so then this is where my entry is gonna be. My stop loss is gonna be right below the green box, and my take profit will always be back at where the swing high is. Okay, take profit. There you go. So basically what I'm hoping price does is pull back to somewhere within this green box, more specifically within the red box, more specifically nearer to where the Fibonacci levels are. And from there, price rejects this area and then goes to my take profit. Why am I not aiming for the highest high? You never aim for the highest high, because what if price falls short? What if it just comes here? Okay, so you always give it good breathing space. So I'm gonna aim it here where the body of price, where the price is the body of the candle. Okay, so this is something, this is how I come up with my analysis. So I've done this, I've done this, I've done this. Well, I didn't really do the trend line. Technically, I can. No, I cannot because there's no trend. I can if I do this. Oh, yeah, actually it will line up nicely with the trend line. It will even line up nicely with the trend line. If price pulls back and rejects this green area, this green zone, it will line up nicely with the trend line. Remember in the beginning I said to find, you use a trend line and you need 3 touches. So 3 touches. 1, 2, and 3. I know that didn't really touch, but if I adjust it, it will touch. Okay, so 3 touches. This is a valid trend line, and we're hoping price pulls back another time back to where that trend line is. Okay, so everything's looking pretty good so far. Can I change this to a different color? So it's hurting my eyes. Okay, hopefully next week when I see you guys, this would have worked out. So far, it's looking like a high probability setup. Okay, so far. Bullish trend line. I want it to be a bullish dotted trend line. Okay. So far, looking like high probability. Okay, what's next on the cheat sheet? Any chart patterns? Do you guys see any chart patterns? No, I don't see any chart patterns. I don't see any chart patterns. Okay, no chart patterns. Death and golden cross, SMA 50 and 100. So you can go to the moving average, type moving average. You're basically pulling out 2 moving averages. I've already got it set here, so I'm just gonna put this out. So the moving average is 50 and 200. Okay, so the 200 is the one in white, and the one that is the 50 is the one in green. How does this work? Usually, okay, if it is working, usually, if the green, which is the lower moving average, the 50 moving average, is moving above the white, which is the 200 moving average, it is the moving average indicator that price is moving in an uptrend. Okay? If the green is moving below the white, it means that it's signaling a downtrend. It's that simple. Obviously, the moving average is not accurate 100% of the time, but when it is accurate, it gives pretty good information. Okay, I'll give you an example of when it's working very well. So you guys can see here. Okay, obviously it didn't work very well. It didn't work very well in this part, but you can see when the green crossed the white in this case, right? It crossed the white, you can see that price just shot up, okay? The moving average is just signaling an uptrend. When priced, the green crossed the white, it was doing a pullback. And the minute it crossed the white again onto the upside, price continued to rally up, okay? So I wouldn't say the moving average is a perfect indicator, but it gives you some kind of idea where direction is. Obviously, it's not accurate all of the time, but there is no single indicator that's accurate all of the time, okay? There's like hundreds of indicators out there. There is not a single one that will work 100% of the time. So we're basically just doing our best with whatever we have with the indicators. Okay, and the moving average does work when it works. Okay, so hopefully this time is one of the times that it works. Okay, it's showing that it is an uptrend. So hopefully if price pulls back here, then it will continue with its uptrend and the green is still moving above the white and we should be good to go. Okay, so far I'm pretty happy with this analysis, to be honest. Natural moving average, I'm not going to use that because we've already used this. Stochastics and RSI. Okay, so let's pull out stochastics and RSI. Okay, how do we use stochastics and RSI? Based on the cheat sheet, there's two ways to check if there's three recent bounces or reactions, or you look for divergences. Okay, that's the two ways to use stochastics and RSI in how I use it. So the settings that I usually use for stochastics is 21, 5, and 3. Okay, I find that these settings makes the movement way smoother than it is. Okay, so what I'm gonna do is look for the last 3 bounces and reactions. Okay, I'm going to highlight where the last swing high and swing low is. Okay, you can see that was where the last swing high and swing low is. So whenever there is a reaction here on stochastics, there should also be a reaction on the charts. Okay, I'll give you an example. If here price came here and it reversed, okay, it came here and reversed, I would say this is accurate. It's giving accurate information. Okay, every time it comes to this green line, it's supposed to have some kind of reaction, and it does. Okay, so now we're at the green line again. Price is expected to have some kind of reaction. Whether the reaction is deep or shallow, I don't know. That one we need to wait for price to play out. But every time price reaches this green line, it is showing that it's supposed to give some kind of reaction onto the charts. So price was here. This is where it is. It came here and then it reacted. It came here and then it reacted. Okay, so it's the same. That's how you use stochastics and RSI to look for support and resistance. We are now at that green line again, so price is supposed to pull back right now based on stochastics. Okay, so honestly, so far so good, man, with the analysis. Okay, next thing I want to see is RSI. Do I see anything? I'm trying to see if there's any divergence. I don't really see divergences. Divergence meaning price is moving up. On RSI is also moving up, so there's no divergence. Divergence is when price is moving up on the charts, but on RSI or stochastics, price is moving down. So I don't see that happening. I'm pretty happy with the analysis so far. So far, so good. Okay, correlation. Okay, remember, if we are looking to buy EUR USD, it means that we want the euro to go up in price and we want the US dollar to drop in price. Okay, so how do we know if the US dollar is dropping in price? We go to DXY. Okay, DXY, which is the US dollar currency index. This chart DXY tracks the movement of the US dollar. So we want this to be dropping in price so that the EUR can be going up in price. Okay, there is correlation. It is inversely correlated. Inversely correlated to EUR USD. Okay, so I mean, one look, I see a very clear downtrend. So the downtrend at its least is confirmed. The question is, like I said, price never moves in one direction. It's always moving in a zigzag. Okay, so right now, what I want to see DXY do is a pullback and then continue with the drop. Same as EUR, a pullback and then continue with the rise. Okay, it's just the opposite direction because you're going against each other. So let's do a quick analysis on DXY to see if the correlation is accurate. Is it time for a pullback? The only thing that will help me at this point of time is really stochastics and RSI. If it has reached an oversold area, I would believe, it's really oversold here. You guys can see it's really, really oversold. It's probably time for a pullback, right? Let me change this to 21, 5, and 3. Let me highlight the zone. I'm just highlighting the most extreme swing low zone. Okay, so when there was a reaction, remember the cheat sheet said that you need 3 recent bounces or reactions. So when price was here, did price move up? When price was here, did price move up? I guess there was a bit of reaction. There was a reaction. The reaction wasn't dramatic for sure. When price was here, there was also a reaction here. When price was here, I know that didn't touch, but it's basically forming a swing low. And when price was here, there was a bit of a reaction. Okay, so we noticed that every time price reaches this green area on stochastics, there will be a little reaction, a little pullback happening on DXY. Okay, so we are reaching here. When it reaches here, hopefully it does a little pullback. I don't need it to do much, I just need to do a little pullback, just a little bit of a pullback, which is enough for that pullback on EUR, and this analysis will be gold. Okay, so far correlation is there. Everything looks good. I'm going for a reversal, not a breakout. I'm done. I'm happy with this analysis. I would say this is a high probability analysis. On top of that, because I'm also a fundamental analysis trader, I follow the news quite closely. Actually, the US dollar is devaluing. Okay, so the US dollar is actually dropping in price when we're talking about like fundamental analysis. I'm not just talking about technical analysis, I'm talking about fundamental analysis. So the euro is expected to go up in price against the US dollar because the US dollar is becoming very weak. So just a quick chart and you will know that it is dropping in price. Okay, so yeah, I'm pretty happy with this. TA showing uptrend. Strong bullish momentum. Breakout of trend lines on weekly. Indicators supporting analysis. I'm actually really happy with this. I'm not gonna lie, man. I am going to watch this closely. I think there's a good chance this will play out. there's a good chance this will play out. I just need it to pull back to the entry, and there's a good chance this is going to reach the take profit. Okay, so I'm happy with this analysis. Will it happen within the next few days? I don't know, but I think it definitely will happen by next week. When I see you guys and we review this trade, it should already have happened. Okay, whether it hits the stop loss, whether it hits the take profit, I have no idea, but obviously it's best if it hits the take profit, right? We're talking about a 1 to 2.5 trade because I gave the stop loss more breathing room. If you want a really tight stop loss, you can either just avoid the red area, but I'm being very safe by avoiding the red and the green zone, giving a lot of breathing room. It can be way tighter, bringing the ratio to 1 to 3. Yeah, and also the entry can actually be way lower as well. Okay, depending on if price is showing a reversal pattern. I think I'm pretty happy, okay? Okay, I'm done with EUR USD. I have a good feeling about this setup. Please do not follow me blindly. I am merely showing you my analysis. Please take it as a learning curve. This is not a place for you to copy trades. I am not a signals group, okay? I am showing you how I use this cheat sheet to come up with my analysis, okay? I literally showed you exactly how I use everything on this cheat sheet to come up with my analysis, and this is my analysis. Okay, let's move on to the next chart. I've got like another 15 minutes with you guys. Give me a moment, guys. Let me just check with YouTube. Yeah, I've got about like 13 minutes with you guys. I should be able to do one more analysis. If I don't explain myself too much, I can do two more. But then that will defeat the purpose of this being an educational webinar, right? Because you don't know what I'm doing. Okay, so I do think Ethereum is moving in an uptrend, right? It's quite obvious. So even if I cannot draw a very nice looking channel, right? Yeah, I'm not really able to draw a very nice looking channel here, but okay, if I look at the cheat sheet, it says a channel needs 4 touches, 2 at the top, 2 at the bottom. So I cannot really draw a very nice and clean channel because it's not really touching. This part is not touching, not touching, not touching. This part is touching, but this is not. This is touching, touching, touching. I know it looks like it's not touching, but if I adjust it, it will touch. Okay. Right? It doesn't look perfect, but we need to remember what constitutes an uptrend and what constitutes a downtrend. So an uptrend, all you need is higher highs, right? This is actually a higher high. This is a higher high. Okay, this is actually moving in a higher high. Okay, and you need higher lows. So if you pay attention, this is actually moving in a higher low as well. So although the movement looks like it's sideways, but it's slanted to the upside. So on a long term, I am biased that Ethereum is actually moving up, right? It's just that the question is it done with the pullback, right? It is moving in a zigzag pattern for sure. Are you done with the pullback, or do you want to move up from here? Okay, I think it doesn't look very done. It looks like there is way more space for price to move down. So not a lot of information, not a lot of very good information is being taken from the weekly, but I do agree that on the long term it is moving on an uptrend. Okay, other than that, let me see. Okay, 1, 2, 3, 4, 5. 1, 2, 3. Okay, yeah, I'm happy with the idea that it's still on a downtrend. It is still doing a pullback. It's not that it's on a downtrend long term, but it's on a downtrend right now, unless I can find other things that will tell me otherwise. Okay, I see price moving in the channel still. I think Ethereum is just going to keep moving sideways for a bit. Okay, so remember the cheat sheet. See a channel. I know we're supposed to follow this sequence, but I see the channel right now. Right, I'm sorry, not the channel, the triangle. I see the triangle right now, so I'm just going to light up right now. There's no trend line because the price is moving in a triangle, so it's not possible to be moving in a trend line. Okay, are there horizontal levels? Let's find out. There's obviously horizontal levels. Yeah, okay, so what I think is going to happen with Ethereum is that it's probably going to do this for a while. The price is probably going to just keep hovering around 3002, 2009, 2008 area for a while, until for the next few months at least, before it reaches the end, and then we're going to see either a breakout to the downside or the upside. I don't know, but I know right now it looks like it's probably going to move sideways for a bit. Okay, so because I think it's going to move sideways for a bit, we go down to the small time frame, which is the 4 hours. That range can look very big. So we want to, for day trading purposes, narrow down that idea for a little bit. Okay, I think I'm going to call for a sell for now. Okay, we are at a overlap area here. Overlap area, okay, price came here 1 time, 2 times, 3 times, 4 times, 5 times. Okay, it's probably gonna come do whatever and then come here the 6th time. Okay, but as of now, direction wise for Ethereum, not the best. It's just moving sideways. But if I have to come up with something really quickly, it's probably going to be a sell, not because it is trending, it is moving in a downtrend, but because it has reached a resistance. Do I think this is a high probability setup? No, I don't. Whenever it is a sideways market, I never consider it high probability. Will I take this trade? I probably will, on a very small risk. So usually I would risk 1%. If I have $100,000 account, I would risk 1,000. Okay, usually that's how it works. But if like this looks like a trade that might happen, but it's not really that high probability, like it's a question mark, but I feel like getting in, then I'll probably risk 0.5%. Okay, obviously the best trades are only to take high probability setups like this. This is a high probability setup that I think it is. Okay, so this it's not low probability either, because I know for a fact it's moving sideways, right? The question is, will it hit my stop loss and my take profit? Okay, so if I have to come up with something, this is it. I'm not aiming for the swing low here because chances of it hitting is it has to go outside of a channel to hit. So I'm going to just put it above here where this swing low is. Okay, where this swing low is here, and hopefully price hits that. So what I think is going to happen is Ethereum doing this, basically. That's basically what I think is going to happen. Let me see. Cheat sheet. I'm going to pull out the horizontal levels. I already did that. I know if I pull out the moving average, it's not going to tell me much, because moving average does not work well for sideways markets. Okay, moving average only works when price is trending. Okay, stochastics and RSI, this might. I mean, stochastics is basically saying it's time for a reversal. Let me change the settings to see if it improves. Okay, based on historical. Okay, remember, you need check the 3 recent bounces and reactions. So I'm going to first highlight when there is a reaction or a bounce or a reversal. Okay, every time price came here, I'm going to change this to a different color because this yellow is hurting my eyes. Okay, red. Every time price came here and it reverses, by right on the charts, it should have reversed as well. So there was a bit of a reaction here, same as on the charts, bit of a reaction, and then the real drop happened here. There was, I would say this is pretty accurate to what this is showing. It's just that reaction not that accurate. It's not very reactive. Okay, I'm gonna extend this a bit more. Okay, when price came to this level here, you can see on the chart there was some kind of reaction as well. Okay, so this one was accurate. Here, when price came to this level, by right, it should have dropped on the chart, but instead it kept going higher. So I wouldn't say this part worked very well. Here as well, price came here. On the oscillator, it has already dropped, but on the charts, it was still going sideways. It was still going sideways. So this did not work very well either. Okay, so in this case, we can conclude that stochastics didn't work very well with Ethereum on the 4 hours in terms of like bounces. Okay, so the other way to use stochastics and RSI is to look for divergence. The other way is to look for divergence, means that if price is going down, on the charts it's going up. It is the oscillator's way of telling you that, hey, there's a possibility of a trend reversal. Okay, I mean, it looks like there's a divergence. For those who are confused, refer to this list. You just have to Google. Okay, so if price is going down, but the oscillator is going up. Okay, price is going down. Okay, but the oscillator is moving up. This is a signal of a bullish diversion, and there could be a possibility that price wants to do a trend reversal. Okay, so far things are not looking good for this Ethereum trade. Yeah, I see two things, Jamilu. So far this is not looking good. I do not want to force this. Okay, this is when you have to be logical and be like, okay, there is clearly a bullish divergence, right? If price is going down and the oscillator is moving up, price is going down, we can all see that price is going down, but on the oscillator it's moving up. Okay, there's a bullish divergence. Okay, I'm gonna have to scratch this entire analysis. I have to scratch this analysis because bullish divergence, that means that there's a high chance that it's not. I mean, there is a possibility that this is You know, sometimes if it's a medium probability setup, I might still get in, but in this case, it's not even medium. Okay, so what I can do now is consider looking for a buy entry, right? I can consider looking for a buy entry. Why is my analysis just swapping so quickly? Just because I saw that. Because remember, price is moving sideways, right? So it's moving sideways. I don't know if it's time for it to reverse or not. So what I'm going to do now is going to change the take profit as the entry. There's going to be two entries because there's a possibility of a breakout or a reversal. Okay, price could just break out here and continue higher, or it could do a reversal first and continue higher. That's why on the cheat sheet, you need to decide whether you're going for a reversal or a breakout. In this case, I can't really tell because I need to wait for price to do what it wants to do. If it gets here, I'm going to consider wait for a breakout. If it gets here, I'm going to wait for a bounce, a reversal. Okay, so that both is my buy entry. I'm going to have two stop loss depending on which direction price moves to. And my take profit will be either here. If price comes back here, my take profit will be here, right? Because I'm not aiming for much. I'm only aiming for the next zone, right? But if price does a breakout, then my take profit will be here. Okay, you guys see how this works? So it has to depend on what price is going to do next. Okay, so that's all I have for you guys. That's exactly how I use the cheat sheet to do my analysis. Hopefully that EUR-USD trade works out. We will review it together next week. I'm not going to change anything. I'm very transparent with you guys. If I win the trade, I win the trade. If I lose the trade, I lose the trade. Okay? Because you're supposed to take this as educational, right? You're supposed to take this webinar as educational. So next week, whether I win or lose that setup, it will just form as an educational and learning curve of what to do. Should we continue moving the cheat sheet? Should I change the cheat sheet? Whatever it is, we need to collect data to see how well the cheat sheet is working. Okay, so that's all I have for you guys. Brilliant. Thank you. Learn something every time. Thank you so much, Jamilu. I will catch you guys next week, same time, Wednesday, 3:30 p.m. Singapore time. I know lately I've been changing the schedule a lot. Again, I am traveling quite a lot, so hopefully I don't have to change it anytime soon. The fixed schedule is Wednesday, 3:30 p.m. Singapore time. But if I have to change the day before or whenever, just come on YouTube and just see if it's still scheduled for the same time. Okay, I'll give you guys an example of how that would work. Okay. So if you go to YouTube and you type IC markets or IC, whatever it is, okay, you go into IC, you type live, you click into the live, okay, it would show you scheduled for like, okay, the next time I take you guys is here. Scheduled for the 4th of February, 3:30 p.m. But in the event I have to reschedule for some whatever reason, you will see this timing change here. Okay, you will see scheduled for change. Just follow this timing here. Do not look at this banner here. Okay, do not look at the cover photo. Look at whatever it's scheduled for. Okay, so that's all I have for you guys. See you guys. I probably won't be changing the schedule anytime soon, but just in case, you know, you never know, like if I have last minute travels, if I'm suddenly sick or whatever, just take note as for the schedule for. Okay, bye guys, take care. See you guys in a week. Hopefully that EUR-USD trade works out. That means if it works out, it means the cheat sheet works and we can continue using the cheat sheet. If it doesn't work out, I might have to sit back and review why it's not working out. Okay, bye.